Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind a couple of things. One, obviously, is that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. And we'll go over some ideas with regards to risk management as we simulate maybe a trade or two. There's some nice tools built into our web trader and our app that make the risk management side of things quite a bit simpler. So if we log in the upper right hand corner here on our main website, we'll be in the web trader platform, which allows you to trade on both MT4 and MT5 accounts, but with advanced functionalities that only exist in our web trader. And also our app functions the same way. Now, before we jump into maybe looking at specific instruments, we should talk a little bit about what happened fundamentally recently, in the past day or two specifically. And so out of the US in particular, there's been a focus on the inflationary data. While other major economies have already seen fit, countries have seen fit to lower interest rates as inflation has come down. The US has not. Multiple times of the FOMC committee meetings in the past months has not lowered the interest rate any further on the federal funds rate in the US. And so there's anticipation about any inflationary data that comes out and how that might relate to projections about future interest rate cuts headed forward with the FOMC committee and Jerome Powell, who is kind of the head guy that makes that decision, along with, I'm sure, the rest of the committee with their input, the decision on whether to cut rates, hold rates the same, increase interest rates, etc. Now, the backdrop of all of the rates was that when inflation was way out of control, coming out of the pandemic after all of the stimulus money that was handed out, inflation had gotten so high that, and interest rates were brought so low that inflation was so out of control, rates had to be brought up dramatically to slow things down, to slow the buying power down basically, and bring down inflation. And it worked. Inflation came down drastically compared to where it was, and then interest rates started to be cut back down some. But then in the US in particular, the rates were frozen kind of at the level they are now for months and months now, even though inflationary data seems to be coming down lower and lower. And so there's kind of this situation where each time there's inflationary data that comes out of the US that's lower than expected, the markets seem to cheer that news, then expecting that rates are more likely to be cut, because if inflation is so low, maybe there's no reason to keep interest rates so high. Now, they've been disappointed time and time again over the past months where the rates have not been cut and they've been held in place. And so again, Monday, or let's say Tuesday and Wednesday this week, there was momentum that came in with data that showed, again, lower than expected inflationary numbers. And so the CPI data in particular out of the US, the Consumer Pricing Index, and the Producer Pricing Index, the PPI data yesterday, both had all kinds of numbers that show inflation is much more under control and even dropping faster than expected. Okay, usually that kind of news is bad news for an economy. It shows lack of demand. In this case, because the point of the high interest rates was to quell the demand and bring down inflation, those numbers coming in lower than expected on the inflationary numbers are actually typically being cheered by the markets with anticipation that that might lead to rate cuts. So that happened again this week. It happened Tuesday, it happened yesterday. There was a bit of a snag with the markets yesterday when a story came out that Trump had been talking with some of the congressmen and maybe even took a vote from them, kind of non-informally or non-formally, informally took a vote, just kind of speaking. Well, how many of you think it's a good idea, if we got rid of Jerome Powell? And I guess he says that most everybody said, yes, you should get rid of him. But then he said that he doesn't have plans of firing him, but they are investigating some activities of Jerome Powell. So it looks like they're trying to push him out, if not fire him at some point, because Trump feels that rates should be cut, and many others feel that way as well. And for whatever reason, Jerome Powell continues to say he doesn't think he should cut interest rates. And so there's this bickering back and forth. And so when that headline hit yesterday that perhaps Trump might fire Jerome Powell sometime soon, there was a big spike down. You can see it here on the S&P 500. We see the upward movement with the inflationary data that was lower than expected, positive response, and then you see this spike down. Okay, that was when the story hit that, hey, he might be firing Jerome Powell. Now you might think, well, why would the markets sell? The idea is if he's going to fire Jerome Powell, he's probably going to replace him with somebody that is more likely to cut interest rates. And so the market likes the idea of lower interest rates. In general, that's been the reaction. And so it was pretty predictable that because that was the story that caused this spike, that it would bounce right back up. And so we started drawing support levels yesterday and missed this one, but caught this one and said, okay, it's probably going to push back up now, because that was actually good news for the market, that story, along with all the ultra low inflationary data, lower than expected coming in. And so it was an easy call once it got back above the support levels, then to think that this might climb further based on the fundamental news. And you line that up with the technicals and you say, okay, well, that's a support level as well. So in yesterday's session, if you watch it on YouTube, we took advantage of that. We took a couple trades on the US 500 from above that support level that were easy profit takes. Okay, and I closed them off before the take profits just so we could start this session clean. I do have one trade running on platinum, and also it was the same idea. Was if interest rates are lower, that tends to weaken the value of a currency, and then the idea would be, well, yeah, inflation's been coming down, but if you lower interest rates, it could come back, and that's the fear of Jerome Powell. So if his potential firing and replacement would increase the likelihood of interest rates being lowered rapidly, then if that's creating optimism on the markets for the stocks, that also could create fear that inflation could return, with interest rates maybe being lowered too quickly then. And so safe haven assets then might have a reason to go up. And that was the thought process yesterday. So we picked the same as the S&P 500. We picked support levels, and in this case, platinum. We could have looked at something like gold as well. We went with a buy move. Now it pulled down a little bit, but it seems to be trying to bounce back up now. It never did break the support level and hit our stop loss. So that's why I've got a platinum trade running, and it seems to be trying to bounce up nicely. And we put a take profit at this week's high, where it opened the week here. Okay, it opened with a gap down. So there's a resistance level here at the bottom of this gap on Sunday night, Monday morning's open, and it came down, found the support, and seems to be bouncing now, potentially with a weakening USD. Precious metals could rise against it if the USD is weakening with anticipation of more likely rate cuts to come. Okay, and again, even without the potential firing of Jerome Powell, why would there be more likely rate cuts in the US that could weaken the US dollar? Because that inflationary data on Tuesday and Wednesday is real data. It was lower than expected. And so that's a situation we find ourselves in fundamentally. with reason for the US dollar maybe to be bearish for the time being anyways, reason for the equities maybe to be bullish, and maybe precious metals as a protection against a weakening US dollar. Precious metals maybe could look opportunistic. Okay, so now we can go in and look at some specifics as well. And if anyone has questions, please, you can type them in the chat box. I'm happy to address them. So one place we can go are the economic announcements that have yet to come. Okay, so if we go to our discovery section, we can go to the economic calendar and we can have an idea about what's upcoming today. Now, first of all, you could make moves like I have an S&P 500, or I'm sorry, a platinum move running. You also could take a look at the S&P 500 and see if you like the entry points. If you feel like the current fundamental news makes up your mind that perhaps you should make a trade on those. I feel there's bullish pressure on those instruments, and we'll look at the chart on a couple indexes, maybe on a couple indices in just a moment. So if we take a look at the upcoming economic announcements, we can see the US announcements are next in line here. There are a number of announcements at the same time. We've got manufacturing data, we've got retail sales, and jobless claims. So we could look at any number of these. Let's take a look at the retail sales because that gives a good gauge of how is the economy doing from month to month and year over year. So this is the month to month numbers comparing this month to last month, what kind of growth, and the expectation is that there'll be an increase in retail sales by 0.2% rather than a decrease, which was almost a 1% decrease in retail sales the last time. So if we take a look here, this tool, if you haven't used it on the economic calendar, the volatility tool in particular, really helps you do a good data crunch on the past announcements. When this announcement came out, what kind of movements occurred on different currency pairings. And so you can pick the currency pairing that you prefer, and I would say look at a few of them to see which ones show the strongest statistics and movements. I'll go ahead and leave the Euro USD, and we can look at different time frames after those past retail sales announcements, from as little as 5 minutes of time to up to 4 hours after each of those announcements, to see how did the charts move. Okay, and if I don't qualify the result of the data, if I say all of the events that are in the history, it's almost 50-50. Half went up, half went down. Okay, but if I qualify this and I say, okay, if the jobs data comes in, let's say, or I'm sorry, if the retail sales come in worse than expected, below the forecast, what effect would that have on the strength of the US dollar? If we click and look, it's happened 5 times, and 3 times it went up, 2 times it went down. Okay, that's not very convincing to me. It's not 80%. It's one number away from 50-50. It's as close to 50-50 as you can get when you look at 5 events. 3 went up, 2 went down. Okay, when the numbers came in below forecast. So that doesn't really pique my interest to want to trade on that based on the past data. If I look, if it comes in above forecast, well, now that catches my interest. Okay, weak data maybe is somewhat expected. The inflationary data has been lower. Things have been slowing down. So if it comes in, if the retail sales come in worse than expected, okay, just more reason for a rate cut. And we already have enough reasons maybe for that. But if the data comes in better than expected, above forecast, all of a sudden, maybe some fear hits and the US dollar strengthens the majority of the time, 71% compared to 29% up. That's more meaningful to me, okay? So I would probably qualify in my mind that if I'm wanting to trade on this announcement, I'm hoping it comes in above forecast because I seem to have a better statistical advantage than to sell based on the past movements when it's come in that way. If it comes in below forecast, then maybe I'm not interested in it. Okay, the data wasn't as strong. So above forecast, better news than expected, more likely than for Jerome Powell to say, I don't think rates should come down. The economy's still really strong. I'm worried about inflationary pressure because the numbers are better than expected. He could more likely take that stance, right, the next time he speaks. And so it makes sense. The US dollar would strengthen with good economic data, better than expected on retail sales, and also compounded with the fact that maybe less likely to have significant rate cuts if the data is stronger than expected. And so a strengthening of the US dollar in that regard makes sense from a fundamental perspective, maybe, when this data comes in better than expected. And then we see that play out on the chart the majority of the time, okay? And the ones that went up didn't go up on average as much as the ones that went down in terms of pips of movement. The average range movement over 43 pips in the 4 hours after the events, okay? And you can also say, well, what about the first 5 minutes? What happened, okay? The average range movement was only 18 pips, okay? And after 4 hours, average range movement, 48 pips. So it's not like after the data came in, it was too late to place your trade. It's not in the first 30 seconds you could place a trade, right? Even 10 seconds once you see the data come in, if you like the entry point. And even in that first minute, maybe they spiked up before going down. Okay, so you can be patient once that data comes in and understand that even in the first 5 minutes, the majority of the movement didn't occur on these movements that ended up moving after 4 hours much further with a much larger average range movement. Okay, some of these getting down near 50 pips of drop, 40, 50 pips. Okay, so if in the first 5 minutes you can get in with a spike up, when you're expecting it to go down, then tremendous, okay? Or with very little downward movement, if you expect an average range movement of 48 pips, okay? If it spiked up 15 pips, then great. If an average range movement's 48, and the majority of the time it ended up down 71% of the time, then maybe that's an entry point you like when this data maybe comes in above forecast, okay? So this is what we call data-driven trading. We're looking at the fundamental news as it comes in and how did it affect the movements in the past, okay? And you can qualify, you'll only trade if it comes in a certain way based on the past data, and if it comes in the other way, maybe you're not interested, okay? And this is just an example of that. You can also check the other currency pairings. You might see GBP USD has larger movements but less predictable. That's the trend that I've seen as I look around, but not always the case. You know, if this came in above forecast, okay, exactly what I was thinking. You see more pips, 55 pips movement rather than 48. You know, the other was in the 40s, this is in the 50s, so larger movements, but look at the predictability, less, closer to 50-50. When it was on Euro USD, okay, 71% to 29%, more predictable movement, but 40, not 48, 43, 44 pips. Okay, so 10, 12 pips less, but better predictability. So you can look through the currency pairings for different announcements and decide which ones from the past look the most predictable, and then you use that as part of your trading strategy to trade on that currency pairing for that particular announcement. Now, if you try these announcements with the data-driven trading, don't just try it once. Okay, you try it once and lose. We already saw in the data it's not 100%. Okay, so try each announcement for retail sales. You know, they come out regularly, each week, each month. Try each one 10 times, the ones that fit your schedule that you think have the strongest statistics, and see which ones do you have the best success with. And if you find a few that you have a good winning percentage with and you're doing good, then add those on as part of your you know, schedule for trading each week, each month, and part of your trading strategies that you use. And it would just be one strategy using this sort of data to go along with other information that you use for trading to diversify things a bit. So, and we could go on and look at lots of announcements, okay? I tend to skip the medium and low ones. I leave the low ones even off. You can have them show. You could leave off the medium if you wish. I've got the medium and the high ones showing, but we could go into tomorrow as well, okay? You know, scroll down, here's the 18th, so here's tomorrow. And we can see that there are announcements out of Japan, inflation rate data, high level of volatility expected with these as well, out of Germany, US, etc. Okay, so you can take a look and see what are the statistics with those announcements as well. I know building permits have been big in the US, again, for the same reason. It affects the strength of the US dollar. If the economy's looking strong, everyone assumes, oh no, he's not going to lower interest rates, and the US dollar strengthens. And if the building permits are worse than expected, the US dollar weakens, maybe with expectation of more likely rate cuts to come. And so if building permits come in above forecast, 2/3 of the time, 67% of the time, USD strengthens, pulls the euro down. If this comes in below forecast, look at the opposite. 83% of the time, the USD weakened against the euro if this data came in below forecast. Only once it went down. It went down huge, but it's an outlier. So if you have your stop loss down here, you only lost once, and the rest of the time, they went up. Okay, 81% of the time. And you just got to try and find your entry point in that first 5 minutes. You know, average range movement, 38 pips or so. The first 5 minutes, you only have 5 pips of movement. And 4 of them went down in the first 5 minutes. Okay, and after 4 hours, all of them were up except 1. Okay, so easy to look at the statistics and decide which announcements might I want to trade on, and maybe only if it comes in a certain way based on how the data looks from the past. Okay, let me take a look at some questions that have come in. Okay, George, you're asking that you're not seeing this interface in your version. It could be, first of all, you have to have a funded account for all of the features to work and show. I believe the economic calendar works even on a non-funded account. Some of the features like the signals, you have to have a funded account for those to work after the first few signals. But if you're not seeing this interface at all, talk with support, tell them that you want our WebTrader interface to be activated on your account. Some of the older accounts, or if you sign up with a partner, sometimes with a link, sometimes they don't have the WebTrader active on older accounts or through certain sign-up methods. So you can request our support team to add to your website login the interface so that the WebTrader platform is active for you, okay? And it's beneficial to have it because these tools are not available if you're trading directly from the MetaTrader platform. You don't have access to this stuff. And while there are economic calendars, you know, on different websites that are similar to this, they don't have these tools. They don't have the data analysis tools, you know, on Bloomberg and different websites where you look at economic calendars. You're not going to have the advanced tools for analyzation. So you really want this active on your account. Okay, so let's leave the economic calendar and we can take a look at maybe some other things. First of all, there's something called the market buzz. If we go to the market buzz, what it does is for any instrument you're interested in trading on potentially, it will web crawl and find all of the latest articles and news coming out and social media comments about whatever it is you click on in the pictogram here. The ones that are the biggest circles have the most mentions that were found online. So you'd say, wow, what's going on with NVIDIA? So 1,843 mentions recently. So let me click on that and we'll take a look in the news feed over here, what's going on with the NVIDIA. First of all, we get a signal. The trend analysis is here. So if you want to look at the technical analysis, you can do that and say, it says price may rise almost 10%, 9.9%. So if I want to see the technicals, it's there. Support and resistance levels, the direction it's expected to go, where you might want to take profit. All of the technical analysis information is here in written form as well. So you can look at that technical signal. But then at the same time, you probably want to ask yourself, does the fundamental news go along with that technical signal? Okay. And ideally, if the signal's saying buy and it looks like a nice uptrend opportunity from a technical perspective, hopefully also the fundamental news is positive so that they're in unison together. And you can check the latest news right here. So as I scroll down, I can look for anything that might catch my eye about NVIDIA specifically. And so, it doesn't take long in the news feed to find something. Here, Trump's fabulous plan to let NVIDIA chip into China again hides a rare agenda. Okay, so if you missed that news, Trump in his trade negotiations with China just recently agreed a day or so ago that, in fact, we're going to let NVIDIA sell their high-end chips to China. For a while, he blocked it because he thought it was a risk with AI development, that the US doesn't want to fall behind China, and we didn't want them to have the best chips from NVIDIA, so he blocked it. Now he opened up the Chinese market again to the NVIDIA chips. Well, of course, NVIDIA opened up huge gap up that day and was very bullish from that news. So you start to say, okay, that makes sense then, that news, that they think NVIDIA could continue to rise about 10% in this signal. If you want, you can read that article. There's a summary of it here, but you can read the entire article by clicking the link and see for yourself, what does, in this case, the Economic Times have to say about this story? Is it positive? Does it help support your idea about this technical signal? The answer is probably yes. And we can scroll down and find more articles about NVIDIA. NVIDIA set to reignite sales of AI chips in China, what it means for the market. Again, you can click, read the whole article. And so you can go down making sense of AI policy under Trump administration. Read that article. And you might start to put articles together that all tell you, wow, that is really good news for NVIDIA. Perhaps, okay? But you make your mind up for yourself, but it doesn't take long to find the most recent news. This came out just 3 hours ago, 3 hours ago, 3 hours ago. The further down you go, okay, 4 hours ago. But still, that's not very long ago. As you scroll down, remember, there's over 1,830 data points here that were found talking about NVIDIA. So to go down and find what's going on most recently about this instrument, and then if that makes up your mind, then you just wait for the US market to open if we're talking about NVIDIA, because it's only tradable on our platform during US market hours. So when the market comes open, you see what's the price point. Where did it open? How does it line up with this predicted movement? They have red lines here that if it goes below that, they don't recommend buying. They recommend selling because that would start a downtrend. So as long as it didn't reverse and it was at a price point you liked, this signal says buy, so you could check and see where is it when the market opens. So we're combining tools here, technical signals with the fundamental news to then have a trading plan. So now it's another trading strategy. We looked at the economic calendar. That's one way of trading off of that data that we looked at on the economic calendar. That's more robotic. Then another trading strategy to diversify with. You might set off 1 or 2 trades from the economic calendar. Now maybe you put off 1 or 2 trades from instruments that you're reading articles about that help you make up your mind which way to trade, and you combine that with the technical signal, maybe to get more specific about entry and exit points in the direction that the fundamental news tells you maybe that you think you should trade. Okay, so it's very easy to use these different tools without ever having to leave our platform or our app to make informed decisions on your part as to what you want to buy or sell on, rather than just randomly buying or selling on a whim, or rather than just looking at a technical signal by itself. Make up your mind. Sometimes these signals come out, the trend analysis comes out to buy, but then you read the most recent articles and all of a sudden something new came out that's negative. And that might tell you, I don't want to trust that signal. If there's conflicting news, if the headline and story that you read was bad news that just came out, you might say, wow, this signal came out before that article. Maybe you say, I'll sit this one out because there's conflicting, information with maybe the signal saying buy and the news in your mind telling you to sell. In this case, it's not. The articles seem to be positive for NVIDIA, but you could qualify which signals you'll follow and also not follow by reading the fundamental news before acting on them, okay? Again, if there are any questions, please, you can go ahead. I see there are a number of people in the session. I must be clear so far because I don't see too many questions, but if you have any, please go ahead and ask. Now, where else can we look for fundamental news? I can go to the news feed, which is here. Here it is, news, okay? So this summarizes everything for you. Rather than reading the articles and watching the economic announcements, this is more of a summary of what happened pre-European market brief. Okay, so earlier today, the pre-European market brief came out, okay? You can see the time and date that it came out at the top, and you can get a summary of what was going on at that point, okay? The pre-Asian market brief, the US market brief, okay? This one's, pre-US market brief. This one's more recent. The US market will open soon, right, in the coming hours. So maybe this is the one that makes sense to look at now. It's more recent. This you would have looked at earlier. And you can make up your mind with this information if that convinces you to buy or sell on something maybe that's recommended down here below. Okay, so or on other instruments, not just the ones that are listed here. Now, if we want to go through maybe a process of setting up a trade right now based on maybe what we already know about the fundamental news, it's pretty obvious that inflationary data has been quite low out of the U.S. U.S. dollar, if anticipation of rate cuts coming are there, U.S. dollar maybe has reason to be bearish. So maybe we start to look for pairings against the U.S. dollar. And so if I'm looking at GBP USD, Euro USD, or USD versus anything, maybe I'm looking for entry points that make sense to me. So first of all, I can look at the technical signal. This signal says to sell in the short term against the US dollar. So that doesn't match the fundamental news in my mind of the US dollar having reason to be weak. So right away, I'm suspect of this signal right now because the technical setup is to sell, and that's what they're feeding off of on this technical signal because there's a bit of a downtrend. But at the same time, there's fundamental news that might work the other way. Now, we do have announcements coming out of the US today. So if that data that comes out today is stronger than expected, then that would feed into this signal. So perhaps you would wait for today's fundamental news and look and say, if that data comes out better than expected, now there's maybe more reason to sell on this GBP USD. So I might wait on this signal before acting to sell. The flip side of that is I might prepare a buy. Okay, if that data comes out later today, we know there's the economic announcements in the US. If it comes out weaker than expected, there's all the more reason for the US dollar to get weak. We already have multiple reasons. That would be one more. So in anticipation that perhaps that data could be weaker than expected today, then maybe you put a pending order on the chart, and I can put a pending order wherever I want. Here's the resistance level. Okay, let me get this one out of the way or off the chart. Okay, here's where we see old support, right? Here's the technical setup, and here we see resistance then. If this goes up and breaks above this line, likely there was reason with those announcements for the US dollar to weaken. So we're looking maybe for a confirmatory breakthrough of this resistance, like this went up, came right back down, waiting for a retrace of this, okay? If it breaks through a second time like it did here, then you could have a pending order to buy on the pound against the USD, okay? If you go back far enough, this spike very well was connected to the news coming out about Powell, okay, yesterday, about Trump maybe firing Powell. And what was the reaction with that? USD weakened, okay? Palladium went up against the USD, pound went up against the USD, so that news is still there. So if more weak data comes out of the US, then it would confirm a weakening US dollar if it broke through this resistance. So the fact that we know there's fundamental news coming that could work in the favor of weakening the USD, I'm avoiding this signal, and I'm actually waiting for a confirmatory breakthrough here when that fundamental news comes out, if it does break up to this point, then I'm in on a buy. Okay? If you know there's big fundamental news and you know there's been a trend in a certain way that already showed itself here, you just wait for confirmation of that trend from a technical perspective and have an entry point here and wait for the fundamental news later today to see if it moves it that direction. Okay? And let's say that's the idea with a third strategy concept now that we're using a pending order before big news in a direction past a price level that you would be convinced if it goes through that price level as the big news comes in, you'd be convinced that that's a trend that might continue. Okay, so let's say I want to buy on this, but only if it hits a certain price. So if I say execute when price hits, okay, if this goes up and hits 134.28, then it would have broken above the resistance, and likely that might not occur until that news comes out late in a couple hours out of the US. Okay, and if the news is better than expected and the US dollar pulls the pound down, then okay, I didn't lose anything, right? And if you followed that signal, then that would have helped. But we don't know how that news will come out in advance. So on the signal, I would wait for the news first. On the preemptive move, I'm setting up for a confirmatory move before I would enter. Okay. Now, what then would we put as an entry point? 134.28 potentially. Take profit then could be at the top of this spike. It showed itself here yesterday, so maybe that's a spot of resistance that it could climb to because that was an old resistance level here. Okay, so there's the next resistance. So you might take profit, say, from a technical perspective at 134, let's say 80. Whoops, take profits down here, 134.80. Okay, woo, $5,200 profit. Well, that would be nice. But you have to ask yourself, well, what's the risk? So if it does break through this resistance and trigger a trade here with momentum, like this one, if the news was big enough to do that, then if it entered here, then it shouldn't break back below this support level, which is the old resistance. If it breaks through the resistance, that tends to act as support. So I can put my stop loss just a certain distance back below, far enough that if it just wiggles back below a little, it won't hit my stop loss. But if it starts downtrending again, then I get out. So if it breaks back below that price level, I have a stop loss. So 134, let's say 10. Okay, so that's just below this line, down a hair, 134.10 for my stop loss. So take profit, much larger potential profit compared to risk, only buying if it confirms an uptrend, and likely after the fundamental news comes in to hopefully drive it that way if it's going to go that way. So now I see my ratio, potential profit to risk, okay? But maybe I don't want to risk 1,800. Maybe I'm only comfortable risking, say, 1% of my balance. If you have a certain number, 0.5%, 2%. So let's say I'm comfortable risking about 561, which would be about 1% of my balance. So now that I have my entry and exit points set, now I can adjust my trade size. If I did one lot, I'm risking 180. Okay, if I do 3 lots, I'm risking 540, which is less than 1% of my account. Okay, 561 would be 1%. Risking 540, maybe I'm comfortable with that. Very low level of risk in terms of what my risk tolerance is, maybe, and potential profit about triple that. Okay, going for about 3% profit, risking 1% or a little less than 1% and near 3% potential profit. So with this type of setup, it's only going to enter if it confirms an uptrend, and that would likely be with news in its favor then, the fundamental news, if it drives up that way, with a low level of risk and a moderate potential profit. Okay, so if I like that setup and the risk that I'm seeing here, then I'm ready to say go ahead and buy. So it didn't open yet because it's a pending order, and so here's my order. Okay, so now I have 3 ways I can trade, right? Economic calendar as the data comes out, preemptive setup, waiting for a confirmatory move, setting that up before the economic data comes out, and then also the market buzz we looked at, trading off of what's the most recent news that's come out for different instruments that you might be interested in trading on. Okay. And a fourth way would be that signal we looked at. If indeed the signal was recommended in the direction that you think the fundamental news suggests. Okay. Any questions before I end things this session? I see one question was asked, but that person looks like they left, so apologies. I didn't answer that question right away. Let's take a look. Will pre and post market trading be available anytime soon with AvaTrade? Okay, so yes, pre and post market trading is available. It depends on the instruments. So if you're trading on the US 500, it's been tradable since 1 a.m. this morning, my time, which was 12 hours ago, 12 hours and 41 minutes ago. So, you know, the US market hasn't opened yet, but it's been trading since then. If you want to trade on the individual US stocks, they're not tradable till the US market opens. Other instruments that are tradable pretty much all day long, except for when the server resets at the end of the trading day, the commodities like gold, silver, platinum, crude oil, those are tradable even when the markets are not open in the US or in Europe. So the European indices are available even when the European markets aren't open, etc. You also have other instruments, cryptocurrencies, if they're available in your region. Those are tradable all day long, even when markets are closed. So yes, to answer your question, most of our instruments are tradable outside of market hours because they're traded on the futures prices. But some, like the individual stocks, are traded on the non-futures prices, and so the stocks are only available when the individual countries that they come from, when those markets are open. Very good question. Emmanuel, if you're not able to log in, maybe it's a password issue. I would say contact our support team, and they'll give you some guidance and some help. There's also the reset password option. If I go to our main website, if you go to log in, you can click forgot password and that'll let you reset your password right there, okay? All right, everybody, thank you for joining. Good luck with your trading today. If you trade preemptively or maybe with the US announcements that haven't come out yet, or really on a lot of things that are going on with inflationary data and things that have already occurred, I think there's a lot of opportunity there. Just measure your risk and take trades that make sense for you. And there's no reason why you can't do well. All right, everybody, thank you for joining, and I'll be back at it next week. Bye for now.